The thing is that when you look up the word value in the dictionary, it doesn't mean cheap. It doesn't mean a cigar butt with two puffs left, that famous Buffett Munger quote. I think it actually means something that has value. And so then I'm really thinking about, what are the cash flows of this business? How does it create a moat, right? Meaning in software, some technological way that's hard for people to compete with it. And then can I get it for a price where there's a margin of safety, where if they mis-execute for a quarter or if they have a little hiccup, it's going to be okay. Because, we've got an entry point where 5 or 10 years from now, this thing will be 5 to 10 times bigger. And that's how we think about all these things. And if you look at the deals that I've done, they kind of map pretty singularly one-to-one to that framework. That is what Tesla is powering. That is what allows it to be a multi-trillion-dollar company. So does it have the same return profile as when I bought it at what is an equivalently now 25 or 30 bucks a share? Well, obviously not. But can it be multiples higher than where it is today? Absolutely. An investor is not a speculator, and it's not a day trader. And I think that a lot of retail, a lot of normal people, the only way they will close the inequality gap is because they take it upon themselves to learn how to become an investor. The government's not going to save them. No law is going to save them. No, taxation of the rich is going to save them. They can save themselves. And you have to learn how to invest, which is to put money into the things you care about and then do nothing. And learning that second part is super hard. And so if you have apps that glorify speculation, you're not going to teach the right kind of behavior. So of course they should exist. I believe in a free market. Am I a fan of them? Not particularly.
I want to understand, Chamath, how you decide what to invest in. Do you believe, and this is a subject that's come up on your podcast, your All In podcast, do you believe in fundamentals, or as has been argued, a stock can trade wherever, regardless of whether it is or isn't hinged, to the fundamentals of the underlying business?
Well, maybe I can just give you an insight into how I process any opportunity.
Sure.
Random company comes in to the top of the funnel. Immediately, I'm making a very quick, hopefully it's a decision, but maybe sometimes it's a judgment. And I'm asking myself, does this fit into my worldview or not? Meaning, is it in my circle of competence? And I have a very simple way of looking at this. Is it going to fix something in equality that I think is important, or is it going to fix something in climate change that I think is important? Those are the only two things I care about. Inequality and climate change. Under inequality, there's a bunch of stuff. Financial equality is important. Healthcare equality is important. Education equality is important. So it allows me to organize a lot of different opportunities. Make something more symmetric. Does it take something that was asymmetric and fix it? So that's my first judgment, which is qualitative. That's why whenever I start my one-pagers, it's always, what is the strategy? And you can read all of these one-pagers now. And what you'll get away from them is the first lens is equality and or climate change. Then I start to do the fundamental work. And this is where I have a real issue with a lot of people who say that they're value investors. I think that I'm a value investor.
One of the things Buffett did was effectively hold forever. Right? Put his permanent capital to work and almost never sold. Is that you as well? Is the money that you have in, whether it's Virgin Galactic or Clover Health or Open Door or SoFi, permanent capital that you're never taking out?
Yes, but with an asterisk. Buffett became a billionaire at 58. I, because of Facebook, quite honestly, got extremely lucky in my early 30s. But this last decade has been training. And, these last few years now, I'm really on the field. I got my pads on, and I feel like I can play as good as anybody else. But the reality is all of the things I want to do vastly outweighs the capital that I have. Probably I'm, running $10+ billion, 10, 15 billion. I don't know the exact number, to be completely honest, I should. But I am risk on. And I am moving a lot of balls down the field, myself and my team. And the reality is that those things sometimes consume capital. So at the end of last year, my family office called and said, hey, dummy, you need to put a little bit of money here just to like make sure that we have liquidity and we can keep doing all these things. And so I had to sell, a couple million shares of Virtue. I didn't want to. I haven't sold a single share of anything that I've done in the SPAC platform, in the pipes, other than those few million shares of Virtue. So if given my druthers, Eric, and if like, if I could really just go for it, I wouldn't sell a share of anything I buy because I believe in it. But every now and then I run up into liquidity constraints like everybody else, and I get a call and they say, Chamath, stop, slow down. And I say, no. And then they say, okay, then at least give us a little buffer here so that we can continue to do all the things you want.
My name is Apurv. I saw some of the venture world at SoftBank, some of the tech world, and you said something about amassing capital. Today, what do you think is one of the best ways for us to amass capital on a risk-adjusted basis?
The last part is just such a sellout part. Or risk-adjusted base. I don't know, fucking buy some bonds? I don't know. Here's what I would tell you, man. I think if you ask me who's building the most important indelible company in the world, I've been very public about this, I think it's Jeff Bezos. Part of what he realized was the value of slow compounding. So here's my little theory about company value creation. The faster you build it, that is the half-life. It will get destroyed in the same amount of time. And so when you think about a lot of like social businesses, that's played out. And when you see sort of like the top, so like, does it take 8, 9, 10 years to build a really great consumer business? It'll take 8, 9, 10, 12 years to destroy it. And we may see the tipping point on a couple of these businesses. Right now, we may be seeing it in front of our eyes, regulatory or otherwise. So why is that an important statement? Amassing capital, to me, is about finding a smart, useful solution to a very hard, practical problem and being slow and methodical. And again, this is what I'm saying. You have to rewire your brain for that to be okay. How do you, in year 2 or year 5, come back to this room for your, what is it called when you get reunion? And say, I'm still working on the same thing. And when somebody says, and how's it going? You have the courage to say, it's hard. I haven't figured it out yet. I don't know. But if you figure it out, and you have this moderate growth, moderate compounding, that is the key. That's gold. I look at like our returns, and it's so funny because it's like, you can get so enthralled by IRRs in our business. And like, I have friends who run other organizations, and they're like, we posted 92% IRR. And I'm like, well, you can't eat IRR. What does it really mean? And when you unpack it, what you realize is like fast money returns can completely really decay long-term thinking and sound judgment. And so I'm like, wow, I would really love to just compound at 15% a year. And the reason is because if I can do that for 50 years, that's $250 fucking billion, like some crazy number. Like, it's just enormous. So it's like slow and steady against hard problems. Start by turning off your social apps and giving your brain a break. Because then you will at least be a little bit more motivated to not be motivated by what everybody else fucking thinks about you. Do you know what I'm saying? It's hard. Think about how all this stuff plays together. How does trying to get, posting your fucking waffles online relate to me starting a business and accumulating capital? This is wiring your brain for super fast feedback. It's the same brain you're using to build a company. Don't think they're not the same. Do you know what I'm saying? No? Yes? No? Yes! Yes, right? You have one brain. So you're training your brain here, whether you think it or not, whether you know it or not, whether you acknowledge it or not. Acknowledge that these things where you're spending hours a day are rewiring your psychology and physiology in a way that now you have to use to go and figure out how to be productive in the commercial world. So if you don't change this, you are going to get the same behaviors over here. Change this. There's a reason why Steve Jobs was like anti-social media. I am telling you I'm not on these fucking apps. I'm not him by any stretch of the imagination. But I am proactively trying to rewire my brain chemistry to not be short-term focused. I'm telling you they're linked.